Mr. Price has bagged profit growth during its full year. The retailer has reported a 6.7% rise in headline earnings per share. That's even as load shedding hit revenue. The group lost about 65,000 trading hours due to power cuts during the period. And that works out to about 226 million rand in revenue. A final dividend of R5.26 has been declared, which is up close to 18%. Looking ahead, capital expenditure has been pegged at 1 billion rand for 2025. That's as Mr. Price plans to open 200 new stores. Jobs are on the cutting block at Mercedes-Benz South Africa. The car manufacturer says it has started consultation as it looks to restructure its manufacturing operations. This includes the firm transitioning from its current 3-shift model to a 2-shift model. The change puts around 700 employees at its East London plant in danger of losing their jobs. Mercedes says it's had to initiate this move to ensure the long-term sustainability of its manufacturing operations. That's as it's faced several challenges, including prolonged port issues and an increase in logistics and energy costs. It's also had to contend with weak demand as household income remains subdued and consumers deal with rising fuel prices. Mining output rose in April. On an annual basis, production increased 0.7% during the month. The largest positive contributors were platinum group metals and chromium ore. Gains there helped to soften the blow of a slowdown in iron ore, coal and manganese ore output. Meanwhile, mineral sales at current prices jumped 11.8% year-on-year in April. State guarantees for renewable power projects are unsustainable. That's according to National Treasury. Projects developed under the Renewable Energy IPP program benefit from government guarantees to IPPs if Eskom fails to pay the agreed purchase price over the agreement term. Treasury has accrued a 300 billion rand contingent liability through guarantees to IPPs. It says the contingent liability on the state's books is no longer sustainable and could pose a risk to the country's credit ratings. Further afield, fast fashion retailer Shein, known for its China-made $5 tops and $10 dresses, has hiked prices by over a third on some core products. This in a move to likely boost revenues ahead of its planned IPO. Here's more detail in this package report.
Shein is doing big price hikes for its clothes ahead of a planned share listing in London. That's according to analysis by research firm Edited. It says the online giant raised the average price for women's dresses by 28% in the US over the past year. Across France, Germany, Italy and Spain, the increase was 36%. Those numbers are far higher than the price hikes at rivals like H&M and Zara. The share sale may be a factor, with Shein set to face higher costs as a public company, a status that brings additional regulation. It will also have to comply with EU rules on online platforms, which could also add to its expenses. Retail experts say Shein wants to signal to investors that it can sustain growth and sell more higher-priced items. One said that could boost the price it gets for its shares in the IPO. Media reports say the company is seeking a valuation of around $64 billion in the sale. It reportedly selected London after encountering pushback from US lawmakers over plans for a listing there. The China-founded firm has faced criticism over labour practices in its supply chain, charges it strongly rejects.
And Tesla shareholders have voted to approve a $56 billion pay package for Elon Musk and relocated the electric vehicle maker's legal home to Texas. Here's more detail in this report.
Tesla shareholders are voting to approve a $56 billion pay package for CEO Elon Musk. That's according to the man himself on Wednesday, with Musk sounding confident on social media. "Thanks for your support," he said in a post on X, adding the vote was by wide margins. The payout would be the largest remuneration terms in US corporate history. Overwhelming shareholder support could calm investor worries about Musk's future at the company. It may also give Tesla a stronger case in its fight to reverse a court decision to void the pay package. But Musk would still face a lengthy legal battle. He has to convince a Delaware judge who said the Tesla board was beholden to him, and may also have to fight fresh lawsuits over the latest vote. The results will be announced at a meeting at Tesla's headquarters in Texas on Thursday afternoon. A person familiar with the preliminary voting tally said big institutional investors and retail investor votes got the yes result over the line. Major proxy firms had urged shareholders to reject the pay package. Large investors, including Norway's sovereign wealth fund, had also said they would vote against it. Tesla shareholders also cast ballots on other proposals, including the move of its legal headquarters from Delaware to Texas. They can also vote on the re-election of 2 board members, Musk's brother Kimball and James Murdoch, son of media mogul Rupert Murdoch.